I'm Bobby Norman with File Plan Partners, and in today's Educational Insights, I want to discuss how our portfolio team at File Plan Partners analyzes individual stocks. As investment advisors, we have access to thousands of stocks and different investment funds. Today, I want to go over how to analyze individual stocks. We are not endorsing the specific companies that I'm about to mention, but it will help with understanding of the topic. So first, it's important to understand the business. Start by understanding what the company actually does. Ask questions like, what products, services does it sell? Who are its customers? How does it make money? What gives it a competitive advantage, such as brand, patents, network effects? An example, companies like Apple. Apple relies on an ecosystem lock-in and premium branding, while Amazon benefits from logistics scale and cloud services. Key sources, company annual report is called a 10K. You can get information from investor presentations, and a lot of information can come from earnings calls. The second thing we look at, check revenue and growth. Look at how the business is growing. Important metrics we look at, revenue growth year over year, earnings growth or earnings per share. We look at operating margins. And so if a company has growing revenue and stable margins, that usually means a healthy expansion. If a company has revenue growth but falling profits, that could show potential problems. The third thing we look at is you want to evaluate profitability. Obviously, profitability tells you whether the company turns sales into real profit. Common ratios we look at, net profit margin, return on equity, return on invested capital. An example benchmark is return of equity above 15% is often considered strong. The fourth thing we look at, you want to analyze the balance sheet. A company's financial health matters. And so we look at debt to equity ratios, cash reserves, free cash flow. An example is companies like Microsoft hold huge cash reserves, making them financially resilient. The fifth thing we look at is you want to check valuation. So even great companies can be overpriced. Common valuation metrics are PE ratios, price to earnings ratio, PEG ratio, price to equity adjusted for growth, price to sales, and then also useful for early stage companies, you can look at EBITDA, and obviously common for comparing companies, an example being a high PE can mean growth expectations or overvaluation. Number six thing we look at is we want to compare with competitors. So never analyze a company in isolation. You want to look at their market share, margins, growth rates. And then number seven, and it's important to look at considering industry trends. So even strong companies struggle in declining industries. So some example of trends, AI and cloud computing benefiting companies like NVIDIA, streaming transformation media, companies like Netflix. The next thing we look at is you want to review the management team. So leadership quality matters. So you want to check on the CEO track record. You want to check on insider ownership, capital allocation such as buybacks and dividends. An example, leaders often discussed by investors, Warren Buffett, Jamie Dimon. So good CEOs in different businesses. Look at their track record. The next thing is we look at charts. Technical context. So even if you're a long-term investor, price trends matter. So common indicators we look at, support and resistance. We look at 50-day and 200-day technical moving averages, and we look at volume trends. And last, you want to identify risk. So every investment has risk. An example being regulation, competition, debt, technology disruption, which is something to look at definitely in this time. So thanks for watching our Educational Insights. The team at File Plan Partners is always ready to assist with helping others understand their finances and sharing strategies to help you live a better, richer, fuller life.